It's time for the Orange Weekly with Howls and Growls.
Hi, I'm Sats Howls.
And I'm Naka Growls.
Together we're
we
Howls
are
and Growls.
Growls.
Welcome back, dogs. If the first 2 weeks are any indication, 2026 is going to be a wild ride for Bitcoin. From shadow reserves to retail breakthroughs, let's dive into the defining stories of Week 2 making blockchain history. On this week's Bitcoin Bulletin, Walmart accepts Bitcoin. The DOJ defies federal order. Bitcoin's quantum threat and the quantum defense testnet. Wyoming and Florida launch strategic reserves. And does Venezuela harbor a secret Bitcoin stash?
And in our weekly Stacks blockchain recap, Circle's USDCx helps drive total value locked to $130 million. Adding to this, USDCx testing hits Bitflow and Granite. We report on the Upbit suspension that proved Nakamoto's strength. AIBTC and the AI-driven Bitcoin agents. And Stacks climbs 94.5% in broker score rankings.
Let's dig. Retail giant Walmart has officially bridged the gap between digital assets and everyday commerce by enabling Bitcoin payments at checkout. Through an integration with the OnePay Cash platform, the retailer now allows its massive customer base of over 150 million people to use BTC for groceries and household essentials. This move shifts the narrative of Bitcoin from purely digital gold to a practical, real-world currency for millions of daily transactions. Analysts suggest this landmark adoption by the retailer sets a global precedent that could trigger a wave of similar integrations in 2026. Next up, a notable disconnect between federal departments emerged this week as the US Department of Justice proceeded with the sale of 57 Bitcoin, valued at approximately $6.3 million. The assets, which were forfeited following the Samurai Wallet legal proceedings, were reportedly transferred to a Coinbase Prime address for full liquidation. The action drew scrutiny due to its direct conflict with Executive Order 14233, a mandate issued in March 2025 requiring that forfeited Bitcoin assets be retained as part of the strategic Bitcoin reserve rather than sold. Moving on to security news now, and in an attempt to protect Bitcoin against the quantum computing threat, BTQ Technologies officially launched its Bitcoin Quantum Testnet. This is the first quantum-safe fork of Bitcoin, replacing standard ECDSA with NIST standardized cryptography to address harvest now, decrypt later threats. The launch follows a notable increase in quantum risk disclosures from major players like BlackRock, whose iShares Bitcoin trust, Upbit, recently tripled its warnings regarding quantum computing risks to shareholders. And never a moment too soon, some might say, as the US prepares for a possible surge in state-level Bitcoin initiatives. On January 7th, Wyoming Governor Mark Gordon officially launched the Frontier Stable Token, FRNT, a state-backed digital asset aimed at lowering transacting costs while returning interest to schools. Simultaneously, Florida State Representative John Snyder filed a bill to establish the Florida Strategic Cryptocurrency Reserve. These state actions are creating a domestic Bitcoin competition among US states to attract digital asset capital. Last up, speaking of capital, markets are on edge following rumors that the capture of Venezuelan President Nicolas Maduro could expose a massive shadow reserve of Bitcoin. While official records show Venezuela holding only 240, new intelligence suggests the regime may have quietly accumulated up to 600,000, worth roughly $60 billion, to bypass US sanctions. Analysts believe these assets were acquired by swapping gold reserves for BTC as early as 2018. If US prosecutors successfully seize these keys, it could lead to a significant supply freeze, as the assets would likely be locked in legal limbo for years. This potential seizure represents nearly 3% of Bitcoin's circulating supply, creating a major new variable for the market.
Thank you, Sats. The Stacks ecosystem has officially entered a new liquidity era this week. On-chain data confirms that the total value locked, TVL, has surged to $130 million, a 12% increase in just 7 days. The momentum was spurred by the rapid adoption of USDCx, Circle's native Bitcoin-linked stablecoin. By providing a stable, institutional-grade dollar rail directly on the Bitcoin layer, Stacks is seeing capital interest that is no longer dependent on the price of STX alone. In addition, the rollout of USDCx is rapidly moving into the hands of developers and power users. Bitflow has officially launched live testing for USDCx swaps, while Granite, the Bitcoin liquidity protocol, is currently verifying its integration for non-custodial lending. These pilot tests and swaps are the final step in ensuring that institutional-grade liquidity can flow seamlessly across the Stacks DeFi suite, providing a stable dollar rail for every major dApp. Meanwhile, the network faced a real-world resilience test this week, when Upbit, one of the world's largest exchanges, briefly suspended USDCx deposits. While the exchange-side hiccup caused a temporary 7% price discrepancy, the Stacks blockchain itself remained 100% operational with consistent 5-second block times. This event has been hailed as a success for the Nakamoto upgrade, proving the network can maintain stability and Bitcoin finality even during periods of centralized exchange volatility. Exciting at least, if not on trend, our next story sees the AI on Bitcoin narrative moving into high gear. The AIBTC working group is now actively developing the ERC-804 Testnet, a groundbreaking standard for trustless agents. This infrastructure focuses on the three critical pillars of agent identity, reputation, and verification. By implementing these registries, Stacks is positioning itself as the primary settlement layer for autonomous AI agents that can manage Bitcoin assets with full accountability. Lastly, in a show of institutional confidence, Stacks climbed 94.5% in the latest broker score rankings. This proprietary metric tracks project fundamentals, developer activity, and market health, now placing Stacks among the top-performing digital asset projects globally. The near 100% score jump reflects a significant pivot in how professional analysts view the network's maturity as it cements its position as the leading layer 2 for the Bitcoin economy.
And that wraps up the Orange Weekly. Remember to share with the pack, keep your noses to the ground, and your ears pricked so you never miss a beat. Until next week, may your walks be long.
And your treats be plenty.